If Trump and Putin sign a peace deal this week, your mortgage rate could drop faster than in 2008. And if you're not ready, you will get priced out before Christmas.
That's right. And then you'll be broke and you'll be living under a bridge drinking rotten milk.
So priced out why? Because there's like people, there's a big rush to go buy homes or commercial properties, or what does that mean?
Well, I think the data is saying that if there's peace, then generally wars drive the price of oil up. And if there's peace, price of oil goes down, inflation goes down, giving the Fed ammunition to start lowering rates. Rates go down. Obviously, we know there's an inverse relationship to values of real estate. That goes up. Better hurry up. Get now, get in contract, figure it out, or you're going to be left behind. Is that true?
Well, yeah. Well, it is interesting because what you just said there is a domino effect. A peaceful world, usually oil prices go down, right? There's less sort of risk people price into the market. Not to mention, Russia's a big supplier of oil, and they're under sanctions, so they're actually, attaching more dollars to the cost of oil. So obviously that changes the price of everything downstream. If that were to happen, I think that you could see a rush on properties. The other thing too is, as a commercial property owner, it's exciting for me because the bigger the delta between my interest rate and my operating cap rate, the more cash flow I take home. Also, the more my property's worth. So like, aside from just sort of the altruistic, like, of course I want peace, seeing a lower interest rate could be really interesting. Now, whether this is the catalyst, I don't know if I'm convinced that they're going to reach a peace deal. I think the Ukraine and the Russia war goes back, hundreds of years. Like, it goes back in time a long ways, and they both have very different perspectives. So I'm not exactly bullish that this Alaska meeting is going to be like God's saving grace. But if it did, I think we could see some pretty good results in the real estate market.
Well, do you think it would be overnight? Like, let's say they sign some kind of peace deal this week. Say that happens. We're hypothetically by the time this airs, like, let's say it's happened. Does that crash mortgage rates overnight? Does this relationship between Trump and Putin and, the oil and the taxation, all that, does it actually crash mortgage rates? Does it drop them drastically enough to make this?
I mean, if it happened overnight and they took the sanction off oil, and we saw, if they really, put a lot of cheap oil into the marketplace, yeah, I think you could see that. You think about this whole dynamic paired with a bad jobs report, whether it was true or not, the report didn't look good. I think we could see a rate adjustment.
But I thought Trump was all about drill, baby, drill, and like using our own resources. So
yeah.
That's
the point. I think it's global. The data's talking about global oil supply. I don't think the United States is ever going to not be energy independent. I think we've learned our lesson. I think we want to be energy independent. But the thing I don't like about this data, it's saying basically oil. Yeah, oil is a huge contributor to the cost of goods, transportation, price at the pump. But there's something else this data completely omits, and that's the fact that our government, both multiple administrations, continue to print money because we spend way more than we bring in tax revenue. And the more you print money, I think, what was it? 25% of the money supply was created over the last 5 years. To me, that's driving inflation. Oil's up, oil's down. It's a commodity. I think people are forgetting that we have a surplus of money still circulating in the system, which is going to keep prices high. Maybe the rate of increase of those prices goes down, but at the end of the day, shit's way more expensive than it used to be. And so I think it's a bit myopic to say that the price of oil is going to just crash interest rates. There's so many things that are causing inflation.
Connect the dots. Like, why would this impact mortgage rates specifically?
Yeah, that's a good question. The thesis to this data is that the cost of oil goes down, driving inflation down. Maybe that coupled with this jobs report, the Fed decides to start becoming more dovish and starts lowering the overnight rate. Right. But there's also a huge other component that I think people forget, and that a lot of mortgage rates are tied to the treasuries, and treasuries are really based on the demand. That the yield on treasuries go up if you have more people demanding U.S. bonds. If the demand for U.S. bonds goes down, the yields go down on those rates, which then that's really what's tied to to the residential mortgage rates, even all the lending we do, all the stuff we do. Mitch, lately we've been refinancing a lot of our mobile home parks. It's always tied to a 5-year treasury spread.
But isn't that still tied to inflation though? Doesn't that still adjust depending on where inflation goes?
I mean, traditionally, yes, I think that they've been linked, but as of late, there's sort of this disconnect, this correlation of demand for bonds. And so people think that the feds just press a button, lower rates, and all of a sudden our mortgage rates just tank, and then the cost of capital is lower, but it's really tied to the treasury. Now, is it linked somewhat? Yes, because you lower rates, that's going to boost the economy. That's the theory. It's going to attract foreign investment into real estate and U.S. bonds, driving yields down, driving real estate interest rates down. We all win. I think that's the thesis here.
It's a net win-win. I mean, I'm all for no war. Like look, I've been to war. War is an ugly thing. I don't wish war upon anybody. I'd love to see a peace agreement between Trump and Putin. Outside of that, like, it's hard for me. Like, I don't want to say the topic itself feels a little boring, right? Like at the end of the day, like, shit's going to happen politically. Wars are going to happen. Again, wars are ugly. I wish it upon nobody. Like, does that affect interest rates? Sure. Like, in a peaceful environment, is it likely that interest rates will go down? And as investors, that gives us more buying power? Absolutely. Like, at the end of the day, we have very little control over what the president does and what happens in these peace talks. And I do think a lot of people get fixated on it. I always go back to, like, I read this, like, as I was reading this intro, like, if Trump and Putin signs a peace deal this week, mortgage rates could drop faster. Like, I don't give a shit. Not on the peace side. I want there to be peace in the world. But I'm like, look, I've purchased real estate in up markets, down markets, high interest rate environments, low interest rate environments, through times of peace, through times of war. Like, you can kick ass in real estate. And I know we say this and it's like beating a dead horse, but buying on fundamentals. There's opportunity in real estate, no matter what's happening in the world geopolitically. And I want our listeners to, like, always remember that. No matter what we're talking about, like, there are opportunities in the real estate market, regardless of what's going on in the world.
Yeah, we say deals are made, not found. And we've seen it. We've seen, first of all, this whole, like, interest rate, especially the younger generation. I'm going to age myself. They act as if, like, this is such an anomaly in history, the interest rates. Yes, interest rates went up the fastest I think they've ever done in history. But at the end of the day, like I said, I bought my first house in 2000. I was paying over 8% on a VA loan, right? So people make real estate work in all interest rates environments. In fact, we see a lot more seller contracts, a lot more seller financing. I think half our portfolio or more might be at least initially purchased and then subsequently refinanced out, but initially purchased on seller financing. Sellers are like, yeah, I need to sell. Sellers have a multitude of reasons to sell, whether it's they need to get liquid because their businesses are declining, whether they're retiring, there's divorce, there's death, whatever the case is, there's a reason people sell. And eventually, if they have to sell, they're going to sell. They're going to sell the real estate and they're going to structure a deal that makes sense. And we've seen this all the time. Guy inherits a mobile home park. He wants to retire. He offers seller financing, right? We get a 5% interest rate on a 30-year AM. Everybody wins. He wins. We win. So I think people adapt. Interest rates are up. People adapt. Interest rates are down. People adapt their strategy. Prices go up. People adapt their strategy. Prices go down. People adapt their strategy. You got to understand the fundamentals.
So do you think these peace talks is it even about politics, or is it just about money? Is it Trump looking at and going, all right, there's a peace chain reaction, oil prices to inflation, Fed policy, housing payments go down? Like, do you think Trump even cares whether there's a war or not, like, politically, or is it just fully money focused on how it's going to impact the U.S. and him looking good if we can get interest rates down and more buying power back in the U.S. market?
I think it's about him looking good, but also I do think he wants a peace deal. I mean, he talked about it on his campaign trail. He's talked about it the entire time. He's pretty frustrated by Vladimir Putin, and he wants a deal. Trump prides himself on being a deal maker. He'd love to make a deal on the world stage for peace between Russia and Ukraine. Now, the effect of that is that a lot of people, maybe he can save a lot of lives by getting a peace deal. So I'm rooting for him to be able to go put something together. So yes, I think, like, it's probably something he wants personally, and he wants to stand on the stage and say he's done it, but also just just economically, I think it would help. It would help the entire world. Not only that, but save lives. I do think, though, that this is a big hypothetical. What happens in Alaska? We have no idea. One of the things that we know is happening right now are tariffs and the effect of tariffs on our economy and on our businesses. We are seeing a tax that's assigned to the American people. Tariffs are actually signed at the dock. The American company pays the tariff. So it's not the other countries paying the tariff. That's changing things in our economy. I think we're seeing bad jobs data. So we could have a situation where tariffs affect the economy in a negative way. And because of that, we have a lower interest rate maybe come September. I think that's more likely than having to do with a Ukraine-Russia war, in my opinion, because tariffs are already in place. That's a known. It's already happening. And any input to the economy, you can't not see an output. I think the output's going to be putting us in, I shouldn't say putting us into a recession, but like the effect of tariffs are happening. People can't buy as much. Things are more expensive on Amazon. Businesses are having trouble because they've got to pay the extra costs.
So, I mean, net outcome, everyone wins. There's peace between Russia, Ukraine. I mean, Russia being the top oil supplier, that helps benefit us and probably most of the world. So there's peace talks. Let's say the war ends and then it starts driving, you think, interest rates down, but then interest rates down may drive prices up. Yes. I mean, we've seen that before.
I mean, there's a lot of people on the sidelines, especially in the single family house market, that I think are waiting for interest rates to come down. Again, I go back to this data. This data is saying basically it's the lower cost of oil that drives interest rates down. And I think that it's so much more complex than that.
This is why, though. This is why I don't watch the news. This is why I don't like every fucking headline. Every headline or anything someone ever sends me a text like, hey, did you see this? It almost always goes back to, oh, I should just buy some more cash flow real estate. Like always. It's even if it's like unrelated to whatever the headline is. It's almost always like, I should just buy and hold cash flow real estate.
Because we can talk about this stuff all day, but you cannot, as a human, take in all of these variables and predict what's going to happen. We can say, hey, this might be likely. This could we can come up with all these theories, but in the end, the people that I see do the best are the people that ignore the noise. They put it to the side. Maybe they read an article, they hear about something, but they basically ignore it. It doesn't change their day-to-day. And they take methodical actions based on the fundamentals of real estate or business or whatever industry they're in. And they're not absorbed with all this bullshit because you cannot take all the variables and consolidate and syndicate and then come up with a decision based on those. Usually you're wrong.
That's my whole fucking point, right? Like, whether they come into a peace agreement or not, Mitch and Travis, you guys are going to buy more real estate. I'm going to buy more real estate. Again, we want to see peace, world peace. Like it's something that's talked about forever, right? We want to see it. But whether that happens or not, I guarantee that we will buy more cash flow in real estate, right?
Well, there might be this personally. I want peace. Like, I don't want to see, I think war is awful. Peace. I think it's people at the top that are sending people to die. I think it's horseshit. So personally,
just talking about how you like war and how it benefits our economy, right?
Yeah, I did not say that. For the record, I did not say that I like war, but I will tell you that.
Was the exact quote.
That's what I heard. That's what I heard.
And here comes the trolls. Travis loves war. He's a warmonger.
Yeah, he doesn't.
Your name right here, it says Travis, I like war Dillard.
Unbelievable.
I want peace globally. The fact of the matter is we're humans and humans are stupid, right? You'll get peace maybe in the Ukraine, war will pop up somewhere else. Like, unfortunately, a lot of people have made a lot of money off of war, and I think that's awful. The military industrial complex, et cetera, et cetera. At the end of the day, though, back to this data point, how can our listeners navigate this data? To your point, like, you could jerk the wheel all over the place. Oh, the silver tsunami. Oh, the peace, war, oil prices, et cetera. That if you're buying on fundamentals, it's boring, dude. It doesn't sound fun at a cocktail party. Like, people like drama. People love to speculate. They like the hot, stock tip. They like this, but it's boring to say I buy boring cash flow real estate. But what's not boring is the freedom that comes with that off that cash flow.
Well, I think you got to play. The way I think about this is I play the macroeconomic events after I bought the property. So, for example, if I can buy a property that I can hold theoretically forever. let's just say I buy property 5 years ago and I'm like, I can hold this thing forever because the cash flow is so good. It doesn't matter what the economy does, up, down, whatever. Well, now I can play macroeconomic events, right? So let's say now we have a deal with Ukraine and Russia and interest rates, maybe they go down 3 or 4%, which is crazy. I'm not saying that, but let's just.
You're going to win either way. You're going to win either way.
Hypothetical, now I own this property that is, I can go refinance and cash flow way more, right? Or I could say, you know what? Let's take some chips off the table. Now this property in 6 months just doubled in price or tripled in price. I can go take chips off the table. So it's like if you can buy on strong fundamentals, hold for the long term or plan to hold for the long term, you can play macroeconomic events. Absolutely. You can absolutely play those, but don't play those to get into deals. Play them after you own the deal.
And I think that's the key. Like I do see a lot of people get really focused in their mind on this stuff when they could be spending their time, because ultimately they're not going to probably have a big impact on the outcome of this conversation, right? I don't know anybody. I mean, Mitch, I know you went to high school with someone that's actually close to Putin, but I don't know anyone that's. And I wasn't joking, and I've met a few people that are close to Trump. But that said, like none of us are going to have a big impact in that conversation. But I do watch a lot of people, investors included, get so caught up in the noise of what's happening in the world and the news that they could be focusing in their backyard, buying investment property to change their life, right? Like that first house hack or that first apartment or that first seller finance deal, because our ultimate focus is time freedom through cash flow real estate. And oftentimes, if we're so focused on the noise, we're not paying attention to what's going on in our own backyard and taking care of our financial situation to better our life and our family and the next generations to come.
Yeah, I mean, talking about the fundamentals is like saying you need to, we were talking about this earlier, it's like you're overweight, you need to go diet and you need to go exercise. That's literally the fundamentals, and it can be boring and can be hard work, but that sets you up for way longer term success than some short-term pill or some short-term diet that you'll never stick to. So yeah, it can be a little bit like, maybe it's not as exciting, but I love the fact that once you buy and you hold a property, if you can hold that forever, then you can play the market. We bought a property years ago, Travis and I, a mobile home park, and we played the market because interest rates dipped so low, this property's value got driven up so high. We go, let's take some chips off the table. We can see that, they're printing a lot of capital. We thought inflation was going to hit, and it did. So we played the market. Looking back, somebody might go, wow, you guys really did your research and timed the market just perfect. But in reality, we bought the cash flow property first. Then we decided when to sell based on macroeconomic events. So it's a different framework.
You got to set yourself up. You got to structure the deal to where it's not speculative. You understand the upside. You understand the cash flow, because you're going to have war. You're going to have peace. You're going to have inflationary periods. You're going to have prices go up, prices go down. But if you can hold assets for the long term, like Gabe always says this, he says, I have more options now because I own real estate, whether it's selling an asset, whether it's refinancing asset, returning capital. I think that you have to buy real estate that you can hold through unpredictable times, because let's face it, we live in unpredictable times. You have pandemics, you have war, you have all kinds of things. And I think it's really important. And that's what we always focus with our elites. Like, look, just understand debt, understand the power of debt, how to use leverage, how to use it responsibly, right? How to use the cash flow to fuel your life and to fuel your freedom and to free up your time. And by the way, real estate is an imperfect market. I also read this data and it's like, it makes real estate sound kind of like a commodity based on national prices. We talk about this all the time. Real estate is very locally specific, very microeconomically focused. And I think real estate's an imperfect market. So you can have all of these variables on the macro stage in the world, and you can find a seller that needs to exit and is willing to make a deal. And he wins or she wins, you win because you're getting the yield. They get the property off their hands. Maybe they do a seller note, so they're getting an annuity stream based on the note. And real estate is imperfect. And that's what I love about real estate. It isn't perfect. We're not buying soybeans. We're buying real estate, which is emotionally driven, which is microeconomically driven.
So I want to ask you guys, shifting a little bit. We all talk about buying on fundamentals, right? Like the right fundamentals. So
between speculation, buy low, sell high, hope it appreciates. Oh, I'm joking. No, I'm joking. We don't do that.
Yeah. So I'd be curious to ask, like, for maybe those that are just tuning in, listening to us for the first time, like, how would you define, in a sentence or two or a couple bullet points, hey, Mitch, what are the real estate fundamentals? Travis, when you're buying on, we say fundamentals, what does that mean to you?
Yeah, I mean, I can jump in. So we're cash flow investors, and I want the property to be able to survive any market cycle. So whether the market's high or low or wherever it is, I want to survive that. So I'm looking at different things that measure the effectiveness of that cash flow. So one of the things is cash on cash. I want a good cash on cash return. I can go buy a CD or a money market account and make maybe 4%. So I need, because I'm taking a little bit more risk than a money market account or a CD, I need a cash flow that's worth it to me. So for me, that's going to be, 8% plus cash on cash, which is the amount of cash I'm pulling out per year compared to the amount that I put in. The other fundamental that we stick to, and this is maybe one of the most important ones, is DSCR, or debt service coverage ratio. And that is after you've collected all your revenue and you've paid all of your expenses, that equals NOI, right? Revenue minus expenses equals NOI. How many times more is the NOI than your debt service? So we look for like a 1.5 plus is where we like to stick, because we know that we could lose 50% of our revenue and we could still pay that debt service. Now, we've never done that, right? We've never lost that much, but things do change. You have vacancies, you have repairs or whatever, maybe something macro happens that does affect your property. So we want to be able to hold that property in any market cycle and then take advantage of different cycles in the future. So the two biggest ones for me, cash on cash, DSCR. The other one is like there's IRR that has to do with like investors, that kind of stuff. And I think that's part of the fundamentals, so maybe not worth discussing. But really, like where we're super opposite than other people is other people will buy, say, a piece of land or development or something like that to where there's cash flow. It's just cash flowing the wrong way. We want cash flow coming to us and paying for the property. We don't want to be paying for properties because you just can't do that forever. So I don't know if that answers the question, but those two metrics I think are some of the most important.
Travis, what about you? Same? Or
yeah, I think what Mitch said was dumb. I don't agree with any of it, and I don't think I'm joking. Yeah, I mean, obviously, yeah. I think
they're business partners, so I hope you guys find
yeah. Well,
we
we're
usually
working on
find
that. I'm getting
something
my
in common.
Yeah. Yeah, I mean, so we talk about this onion analogy. So when Mitch and I are looking at properties, I mean, we do look at location. You got to understand the dynamics of the area. So we start there. Okay, do we need to buy the next Manhattan? Do we need to buy the next boomtown? No. Do we need to buy in an area that has job diversification where our tenants they have multiple income opportunities? Population isn't fleeing out of the area, like in maybe these oil towns, these boom bust towns, right? If that's the case, then okay, that's step one. And then we're looking at so we're looking at the area, the microeconomics of the area, the population patterns of the area. And then we're looking at the subject property itself. Okay, well, how does this property look? Okay, there's room to Mitch mentioned NOI, net operating income. It's basically income minus expenses, not including the mortgage payment or debt service. Do we have the ability to increase the net operating income, whether that's rents that are way below market, whether they're paying two property managers, they have collection issues, maybe we can pass utilities to the tenants, or how do we increase the net operating income? Because then we know exactly what our property is going to be worth, because for every annual dollar of NOI you create, you increase the value 10 to 20 times. So we want upside. We don't like to buy, we like to have some meat on the bone, right? That's really important. And then there's some other sort of risk factors in real estate, like, is there going to be large CapEx requirements? Am I buying a large apartment complex where all of the sewer lines are all faulty and I'm going to have to spend millions of dollars replacing sewer lines or roofs and stuff like that? So that's why we like mobile home parks, right? Because we're just renting dirt out to people. So that's really important. And then, yeah, at that point, when Mitch and I underwriting is really key. When we talk about buying on fundamentals, we're looking at how can we stress test this property? Because a lot of new investors and not so new investors, they will put rose-colored glasses on and they will make the numbers support the narrative that's in their head, right? I love this property. I'm emotionally tied to this property. It's going to work. Oh, I don't think my expenses are going to be that high. Oh, I don't think I'm going to have those sort of CapEx requirements with this property. Absolutely be conservative, take the emotions out of it, underwrite based on the fundamentals. What happens if? Okay, well, if I have a large CapEx event, I have enough reserves to cover that. What happens if rents get subdued in the market because there's an oversupply? What happens if my revenue dips 30%, 40%? Can I continue to operate the property. And that's where Mitch talks about debt service coverage ratio. Banks, everybody thinks that DSCR is so important to the banks. It should be really damn important to the investors too, because that's the moat around your castle. When shit hits the fan, dynamics change, oil's up, oil's down, inflation, whatever the case is, if you've got enough cash flow, even if that cash flow stream goes down, but you've got enough of a buffer to cover those expenses, I think that's going to be really important. So number one, you have to make sure, like Warren Buffett, like number one, don't lose money. That's basically stress testing the property, making sure you can survive. And that's through cash flow. And number two, that's your defense, right? Make sure you've got a good defense, number one, especially if you're raising capital from investors. Do not lose your investors' money. And then the next step is, okay, well, what's my offense? How can I force appreciate this asset? How can I grow value in the property? And then once you grow value, you grow equity. And once you have a lot of equity in an asset, you have more options. You've got refinance, you've got sale, you've got all kinds of things you can do with that additional upside. So defense first, then offense. What about you, Gabe? What do you think?
Well, I actually wouldn't agree with the defense first and then offense, but I appreciate you asking. I thought maybe you were going to forget about my humble opinion. When I think of like real estate investing fundamentals, the first thing that comes to my mind is cash flow. Like cash flows first. And I think it depends on where you're at in your investing cycle. Like, I bought a home in 05, 06, 07, but then I got serious in 09. And I always talk about that initial 2009 through 13 when I bought kind of when I got real serious and started buying all my no money down seller finance. Now, these were all small multifamily, 2 to 10 units, but I bought all those properties with no money down seller financing. But I was also coming from a place where I was working a 30-hour-a-week minimum wage job. So my initial goal was I need to replace. It was less than $1,500 a month. It was like $1,375 was take home, right? Something like that. So I was like, if I can replace that with cash flow, I didn't know any of these other metrics. I didn't know what all these other terms were. I didn't know what IRR was. I didn't know what all these things were. Number one was cash flow first. I didn't know what DSCR was. All I knew was cash flow would allow me to live a life. It would feed me. It'd put food on the table. It'd allow me to function. And so the focus number one was cash flow. Cash flow number one. And I played only offense. It was a lot of years later that I started playing defense and going, okay, I've built this level of wealth. I've built these assets. Now I need to make sure I'm protecting myself. But it was very offense focused, cash flow, cash flow, cash flow. Second was kind of post 2013, 2014, 2015, when I started putting my own capital in deals. That's when cash on cash became very important. So when I really think of like basic real estate fundamentals, it was cash flow is king, cash flow is number one. And then it was like, if I'm going to, because again, my initial portfolio was no money down seller financing. So my cash on cash return was infinite, because I had no cash into the deal, but the cash flow is what allowed me to hold them. The cash flows are what allowed me to eat and scale my real estate. And then if I were to deploy, once I got to 2014 and beyond, and I was starting to deploy my own capital, it was like, what's my cash on cash return? If I'm going to put money into this, I want a strong return on my capital. And those are the two biggest things that I focused on kind of especially at the beginning of my investment journey.
Well, there you go. Cash flow, man. It's offense and defense. I mean, it really is. I mean, cash flow, that's why it's the number one metric that we look at as long-term hold cash flow real estate investors. So I guess to sort of put a bow on this conversation.
Yeah, to tie it in with Trump and Putin's meeting in Alaska or whatever, right?
Yeah, I mean, at the end of the day, stability in the world is important. Also, I think the U.S., and I do agree with this, the U.S. needs to be seen as a safe bet for foreign investment, whether it's bonds, whether it's real estate. If that's the case, I think we all win. And I think there's still a lot of that. I think a lot of people see the United States as a safe bet. I mean, there might be blips on the screen, but I think it's important to realize that you got to buy in fundamentals, man. It comes back down to that. It doesn't sound good at a cocktail party, but you got to do it, man.
Look, and I think we sometimes simplify things. If you go back and listen to some of our older podcast episodes, and we kind of joke behind scenes of like, it's kind of this hidden tagline of like, don't be a bitch, buy real estate. But there's something to that. Like at the end of the day, if financial freedom is important to you and you believe that real estate is your path to financial freedom, at some point you need to pull the trigger and buy some fucking real estate. And there's a lot of ways to do it. And you got to sometimes just turn turn off the noise, quit watching the news, go focus on what's important to you, go build the life that you want. And real estate is a great tool to build just not just the financial freedom, but that time freedom piece, so you can actually live life on your terms and have that level of autonomy.
Amen, brother. Preach.
Love
the
it.
Gabe preaches. And we're starting a cult. It's called the Elite Mastermind. And the Gabe will be in a robe and he will be mentoring all of you. And if you don't buy real estate, he will
Please edit this out.
He will shame you and call you a
gone.
bitch. Yes. So subscribe
to
our YouTube channel.
The videos I send you guys in private.
Yeah,
that's right. You're not allowed to talk about those.
I love your white flowing robes. It inspires me.
There's a level of trust that just got broken.
I didn't break it.
I know you didn't. I'm not looking into your eyes. I can't even see your eyes, Mitch. I
was born like that, Gabe.
Hey, the level of trust, Travis, that was broken.
It's over.
Yeah, I will not be in the cult, and I will not be enlightened by the Gabe.